Hello, everybody. Welcome to SpaceFund's second webinar, Realizing Liquidity in NewSpace Investing. We're going to be talking about the exit landscape today. So before we begin, just a quick disclaimer. This presentation represents neither an offer to sell nor a solicitation of an offer to purchase securities. Any such offer or solicitation shall be only to qualified purchasers as defined in the Investment Company Act of 1940, as amended. The terms summarized herein are confidential and constitute proprietary information and trade secrets of SpaceFund, Inc. In addition, these materials are provided for convenience only and may not be relied upon. With that, I'd like to quickly introduce Rick Tumlinson, one of the world's top space visionaries, as named by Space News. He's helped create the commercial space industry, often referred to as NewSpace. He is an industry-leading writer, speaker, and congressional witness. Previously, he led the takeover of the commercial takeover of the Russian Mir space station, signed the first private space traveler, co-founded the Space Frontier Foundation, and was a founding board member of the X Prize. In 2015, he won the World Technology Award along with Craig Bittner of the Human Genome Project. And currently, he's the founding partner of SpaceFund, Inc. He was formerly founder of Deep Space Industries and his nonprofits, the Earthlight Foundation and the New Worlds Institute. He has a new book coming out by the holidays called The Space Manifesto. With that, I'll let you take it, Rick.
Thank you, Megan, and welcome to our webinar. We appreciate you giving a little bit of your time to us today. Hopefully we can inform and educate you, and maybe even entertain you just a little bit later on. So SpaceFund was created to enable the continuation of the space revolution that is already underway. We have a big highlight coming next week in terms of the SpaceX launch of human beings to the space station. It's really an exciting time. And what we're here to do is to take visionary investors and connect those visionary investors with brilliant entrepreneurs, those who are going to participate in and create the next wave of humanity out into space. Our vision is very simple. We want to open the space frontier to everybody, and we want to enable everybody to help open that frontier. And of course, we want to let anybody who shares in the risk share in the profits. So what we're going to do today is I'm going to hand it over to Megan. She's going to give you a big rundown, an in-depth rundown some of the research that our team has done in terms of the ongoing exits in the field. Then we're going to come back around and I'm going to interview my esteemed and very close friend, Dylan Taylor. We're going to talk a bit about some of the areas regarding his work and what's going on in the exit field, building on what Megan has presented. Then we're going to take a few questions from you all. So without any further ado, what I want to do right now is introduce my amazing colleague, Meagan Crawford. Megan's a long-time NewSpace industry leader. She's a startup executive, a founder. She hosts the Mission Eve podcast, which you have to listen to, which is really bringing in a new perspective of women in the space industry today. She's the founder of the NewSpace Business Plan Competition, which is the longest running space business plan competition on the planet. She's coached hundreds of teams and is really seen as sort of a mentor figure for a lot of the new space startup companies out there. She gives away she and her team give away cash prizes to lots of new space startups. She's the former CEO of the company Deep Space Industries that I had started a few years ago. And she started 4 startups of her own, one of which recently exited. She's the managing partner of SpaceFund and chairman of the board of the not-for-profit Center of Space Commerce and Finance. She also has a degree in this, an MBA in finance and entrepreneurship from good old Texas Rice University. So Megan, take it away.
Thank you, Rick. And as Rick said, we're going to go over just a little bit of background here as far as the history of space exits to kind of give us an understanding of what the field has looked like to date. And then Rick and Dylan will talk about what they see coming in the future. So when we talk about aerospace exits, in the just the wider aerospace, not specifically NewSpace, we were able to track 110 venture-backed companies that have exited since 2009. Of those, only 8 were IPOs and 6 were reverse mergers, so only 14 public offerings out of 110 exits. So taking a little bit deeper look at that, those aerospace IPOs we had 1 in Australia, 1 in China, 2 in Canada, and 5 each in Europe and the United States. On the acquisition side, we had, again, 1 in Russia, 3 in the Middle East, 3 in Canada, 33 in Europe, and 53 in the United States. The 1 US IPO was Digital Globe, which IPO'd in 2009 at over $850 million valuation. It was 16 years old at exit. They were public for 8 years and then were acquired by MDA to become a part of the privately owned new company, Maxar. Of these 110 exits, the average age of the company at exit was 21 years. And 3 of those companies were older than 100 at acquisition. So Peraton, which was a division of Harris, was 122 years old when it was acquired, founded in 1895. Avio from Italy was founded in 1912, and Orlikon in Sweden was founded in 1906. But when we dive a little bit deeper into the data and take a look at what we like to refer to as these new space companies, right? Not companies that were founded in the 1800s, but real startups that were founded recently. And so in order to kind of make a break in the data, we decided to define this as any company that was founded since the year 2000, we would put into this new space bucket as opposed to the wider aerospace bucket. And so taking a look at that data, we found 49 exits, only 4 of which were IPOs, and none of those were in the US, or 1 of those was in the US. Additionally, there were 3 reverse mergers, and 1 of which being the Virgin Galactic IPO that was here in the US. And that was, of course, the first new space company to go public in the States. So of these IPOs or public offerings, 1 in the United States, as I mentioned, that was Virgin Galactic, the reverse merger. PiSat went public in China. In Canada, there were 2 public offerings. Exact Earth IPO'd, and EarthCast went through a reverse merger. In Australia, Sky and Space Global also went through a reverse merger. We mentioned them in our webinar last month as they've recently gone into the Australian version of bankruptcy. And then in Europe, AAC Microtech and GomSpace were the 2 public offerings. On the acquisition side, where the majority of the activity has been, we had 24 acquisitions here in the States, 15 in Europe, and then 1 each in Canada, Middle East, and Russia. Now, amongst these 49 startups, the average age at exit was 7 years, much different than that average of 21 years that we saw in the wider aerospace data set. And so this is great news actually for the venture capital community that is typically looking for exits in about a 7-year time frame. So it seems like the new space community is doing that quite well at this point. So I just wanted to go over a couple of these exits in a little bit more detail, just to give you guys an idea of what kind of exits have been happening over the last few years. So MapSense is interesting in that they're not what you would consider a typical space company. They didn't operate any satellites or launch anything into space. Instead, their job was making data from space more usable and creating value from that data for their terrestrial customers. So they created a platform to help better understand geospatial data sets in order to generate map data analysis and visualizations. And so as more and more data is being generated in space, the industry really does continue to struggle with bottlenecks in data processing, and most importantly, with finding the right business models to sell that data. So companies who can successfully productize space data have huge potential, as seen by MapSense, who was acquired by Apple for $30 million, after raising less than $5 million total in its previous funding rounds. So this is an interesting one. 10 years ago, when Earth observation was really just becoming an interesting market, there were several scrappy startups such as Skybox and Planet that were vying to fundamentally change the business of Earth observation. They were using smaller satellites and the Silicon Valley business model mentality. Skybox was really a darling of the VC world, with investors like Khosla and Bessemer coming in on the company's early rounds. The company's sale to Google and subsequent name change to Terabella is the best exit example to date amongst NewSpace companies. However, just 2 years later, Google sold the entire business to its #1 competitor, Planet, for half of the amount that it originally paid for the company. And the corporate line was that Google realized it just cost too much to operate a fleet of satellites on its own and would rather just buy data from operators. So Clyde Space was a Scottish company manufacturing CubeSats and related technology. And AAC is an established European market leader in the slightly larger small satellite market. And coincidentally, we mentioned AAC a few moments ago, as they're one of the IPOs on our list. They IPO'd in Sweden in 2016. And then Ultisat provided complete end-to-end satellite communication services and network management, primarily for the US government. And they were acquired by Speedcast, which is an Australian company and the world's largest global satellite communications provider, specializing in satellite connectivity for crews, energy, maritime, enterprises, and government. And the acquisition of Ultisat is what provided that government segment to Speedcast, which they previously didn't have access to. And then, of course, we couldn't not mention the Virgin Galactic reverse merger IPO. After raising just over $1 billion in financing, their valuation at exit was $2.3 billion. And if you want to learn more about any of these companies and the others that we didn't mention, we do have a database available on our website at spacefund.com/exits. That details all 49 of these NewSpace startup exits. So have a look at that at your leisure. And with that, we're going to go ahead and get Rick and Dylan back on so that we can talk about what's coming next in the exit landscape. Rick?
Thank you, Megan. Dylan, can you hear me?
I can, sir. How are you?
I'm doing well. It's, I think, been seconds since we spoke last, but great to have you on board, sir. So I'm going to dive right into the questions. They don't have to be short answers, but we want to move along at a fairly brisk pace. I know you and I can go off and off and off on quite a parabola on a lot of this stuff. But
mostly you, Rick. But yes, that's true.
Yeah, you're true. You're true. But I'm interviewing you this time, so this will be a lot more fun. So look, Megan pointed out there have been some exits in the space field so far, but not as many perhaps as some people might have thought. Now, you're obviously the person we should be asking about this, because this incredible company you've started, Voyager Holding, is sort of in the business of starting or creating exits. So I don't want to have to explain what Voyager is. I think you could do a much better job of that. Can you tell us why you created Voyager and what it's all about?
Sure. So yeah, thanks for that, Rick, and thanks for having me. And thank you also, Megan. I'm really excited about what SpaceFund is doing, and you guys are playing a really important role in the industry. So thank you for that. The fundamental premise behind Voyager, excuse me, is that the industry lacks scale. So I think we've done, all of us have done a reasonable good job of capitalizing some of the early stage ventures within the industry. That used to be a problem. Obviously, in COVID times, it remains a bit of a challenge, but I think for the most part, the industry has done a reasonably good job of increasing the number of companies that are being formed and capitalizing the right entrepreneurs who have the right ideas. I think that's great. That's a signal of a healthy industry. However, where I think we're a bit blocked right now is really nobody has scale. So you have a oligopoly at the top, which is sort of the big four, which would be Lockheed, Boeing, Airbus, and Northrop. and you have a lot of emergent new space startups, and then you really don't have a lot of companies at scale in between. I mean, you could even argue SpaceX, which is a large company by NewSpace standards, really doesn't have scale in the whole scheme of most industries. So the fundamental premise is that we need to leverage the best in new space, which is the innovation and entrepreneurial spirit, and the best of old space, which is really the scale, the ability to do very large and complex missions and projects and capture more of the value chain and really bridge that gap. So fundamentally, Voyager is acquiring majority control, 51% or greater of the equity, being very hands-off with the entrepreneurs in terms of letting them continue to innovate and run their businesses, but scaling all the things back office and all the other things that scale with size. Capital scales with size, finance, administration, base engineering, but even client relationship management, access to the Pentagon and DoD and NASA, that all scales with size. So that's the premise behind it. And I've said before, I think to you, Rick, and others, that we're at a place and point in time in the industry where the companies that have the capability, that are highly capable, aren't particularly ambitious to settle the high frontier and do all the things that we're passionate about. And the companies that are passionate about those things don't really have the capability. So we're really trying to bridge the gap between those two.
That's great. And you know what, Dylan? I just realized I forgot to give these folks your bio.
You do that.
And I know. You're a very humble guy. But I really do want to point out to people that Dylan really knows whereof he speaks. He's a very, very successful businessman in his own right. I know personally that he was chafing at the bit for a long time to get into the space field and make a difference. And he has come in the last 2 years like a rocket ship and really started changing the way things are getting done. He's also a philanthropist. He's the 2020 winner of the Commercial Spaceflight Federation's top award for business and finance. The first of which, by the way, which I'm sure you know, Dylan, was won by Paul Allen. You're also a Crown Fellow of the Aspen Institute, a title which I frankly am very impressed by. And Delphi Fellow, Big Think, and one of the leaders in the World Economic Forum. And aside from that, you actually have a diploma from the University of Chicago. It is an MBA in business. I just want to get that out of the way. There are some people who may have heard of you but don't know some of these details about you. And I think it's really important that they understand you know whereof you speak. So, great overview of Voyager, but can you tell us really, when you're out scouting a company or you're getting ready to start that important conversation with a company, what is it that Voyager's looking for?
Sure. So there are some financial screens that Voyager is pretty disciplined on. One is the company has to be post-revenue profitable, so-called post-EBITDA, which is just earnings before interest, taxes, and depreciation, and generating cash. So we're really looking for successful companies that have went through the valley of death, that have demonstrated product market fit, and are successful in their own right, but are really struggling with entrepreneurs saying, I do many activities during the day that I love doing and many activities during the day I don't like doing. I can't get out of my own way, or the team can't get out of its own way, and we've kind of hit a wall. That's the perfect ideal company for us. Then the other screen we look at is, how is this adding incrementally to our capability? I'm a big believer in not only doing these very ambitious missions down the road, but trying to capture more of the value chain. And if you look at really any supply chain driven industry, and space certainly is one of those, the more capability you assemble and the more you're flying different companies in formation, the more the value chain you can capture. And so that's the other way we think about it. And then last, but probably most important, is the team ready? Do we have the right team? Are they chomping at the bit to take their game to the next level? Or are they just looking for some partial liquidity and, set it and forget it, clip some dividends and ride away in the sunset? That's not a good fit for us at all. So those are the three things: the financial screen, the capability screen, and then really the team alignment.
So I know that you're, in many cases, you're really probably not looking to buy out companies completely. You're kind of coming in, but in a way, you are providing an exit opportunity for early investors. Isn't that correct?
Indeed. Yeah, we'll buy, at least 51% of the equity. Typically, we're going to buy somewhere between 70 and 80% of the equity. Yes.
Cool. So I'm sure there's probably at least one startup founder, CFO, CEO, whatever, in our audience today. So what should they be thinking about as they sort of try and build the formula for their exits? What should they do in this early part of their life cycle, or wherever they are as far as listing right now, in terms of getting ready, being appealing to somebody like you?
Sure. Well, I think I'll answer it in a way that I think would be generally appealing to people who would be looking to acquire or provide an exit. The first and foremost is product market fit. So you have to have a product, ideas are a dime a dozen, as we know, Rick. And I probably see 10 business plans a week, maybe more than that, and a lot of great ideas. But ultimately, you have to demonstrate that idea has a product market fit. So some kind of traction, ideally revenue, but some kind of contractual agreement with a potential client. So that's one. Secondly, strength and stability of the team. I can't stress this enough. There's never been a business plan ever written, as far as I know, that was implemented the way it was originally envisioned. There's going to be pivots. There's going to be, potholes and bumps in the road, and you need the right team, a team that's has each other's backs and high level of trust and all those sorts of things to navigate that. So I think the team is really important. That will be scrutinized for sure. I think who you've taken capital from, this is underrated. And it's underrated for a couple of reasons. One is, as an acquirer, you're looking at the cap table and you're saying, okay, well, how do we navigate this? And I see cap tables that are broken. There are too many people on the cap table. I see cap tables that have people on the cap table that, frankly, we don't want to do business with, and others don't want to do business with. So I think you should be very careful with who you take money from. That's another element. And then ultimately, I think you need consistency with what you're telling the market, how you're managing your team internally, and what you've actually demonstrated. There's a lot of hype in the industry, as we know, a lot of companies who say one thing and do another. So I think really sticking to your knitting and making sure that you're actually executing on your vision is really important, because one of the fears people have in exits is, they're going to acquire something and ultimately it's not going to work. And one of the ways just the human mind, I think, evaluates these things is consistency, because consistency is sort of an equal sign to stability. And stability is ultimately what you're buying. You're buying a revenue stream. So those would be some things. And then, just one further underline on who you take money from. It really is important. Not all money is created equal. There are good guys in this industry that are very abundant thinkers. SpaceFund would be top of my list. And there are other people in this industry who are not wired that way and have a very scarcity thinking view. I won't name any names, but any entrepreneur can make just a few phone calls and find out who those people would be. And I would just highly, highly, highly encourage you not to take money from people who, don't appreciate and sort of embody the values of this industry.
So in a sense, you're kind of on your way to becoming the sort of a Warren Buffett of space. He uses a lot of spreadsheets and stuff, but there's an intuitive part to what he does. There's an examination of sort of the management's personalities, the familial organization of a company before they make that kind of decision. Isn't that true?
I think a bit. I mean, obviously Warren's a legend, and I would never ever, put myself in the same category as him. But what he's done very well, which I respect, is that he's used successful companies and the cash flow that those companies have generated to reinvest back in additional acquisitions, and essentially played for the long game. Everything, including his wealth, has been a snowball effect on a capital gain deferment. So I appreciate that. I think the other model I admire that's probably closer to Voyager is called Danaher, which if you study that, that's a publicly traded company. And essentially what they're doing is they're really focused on what is the incremental capability that we're bringing to the table. And they've also done a very good job of building the platform. And I think that's a model I really enjoy, because ultimately, so why are we doing this? I mean, I am a capitalist, Rick. I'm not allergic to money, but it's not my primary motivation. My primary motivation is to build a really special company that's capable of doing really cool missions. That's what I'm focused on. So if we're not adding to the incremental capability and we're not building something that's on par with those big four, 7 or 10 years hence, then regardless of the financial outcome, that won't be a success in my mind.
Right. It truly is a long game we're playing, isn't it?
It is. Has to be. And that's, just to comment on that, that's part of the reason why I think the industry has struggled with exits. Typically, exits will come from private equity. And private equity, this is a really important concept for people to understand. Private equity is an IRR-driven industry. And IRR is not only return on capital, it's a velocity of return on capital. And by that, I mean you're rewarded equally for not only the magnitude of capital you return, but when those cash flows come back. So there's always a push and pull between, do I leave the money back in the business, or do I pull the money out of the business and return it to shareholders? And because IRR is so sensitive to time, oftentimes that calculation is, I'm going to pull it out. So I think it's a really important concept that people just, I don't think fundamentally understand, is that IRR drives PE. In space, because of the longer lead times, you end up in the same place, which is multiple on invested capital, but you typically it's back end loaded. And so that's why you don't see a lot of private equity exits.
So speaking of that, who else do you know of that is doing something similar to you, or other companies that are out there in the market to purchase?
Within NewSpace?
No, within NewSpace.
Yeah, well, a couple that I'm aware of. I don't know them well. I know NewSpheres has done a few acquisitions. They, of course, bought Firefly and I think maybe a couple others. I think Bradford, of course, they bought Deep Space Industries, as you know, Rick. I don't know a ton about Bradford. I get the impression their model is a little bit different than ours. But yeah, I think, there's a couple. There's another one that just bought Tethers recently. Tethers was a Seattle-based company called Emergent, and I think they're based in Colorado. And it's my understanding that they are backed by Blackstone. I haven't personally verified that, but that's what I have been told. So I think there are companies kicking around, but as far as I know, nobody who's really doing, a high number of transactions. We're designed to do. We've made one acquisition. We'll announce another one on July 1st, and we have about 9 more in our pipeline. We'll probably do 4 or 5 deals a year. And I don't think we'll do more than that, because one of the things you have to do successfully is integrate these firms. And I think realistically, it's hard to integrate more than 4 or 5 firms a year. So that's kind of where we're set up. But other than that, I can't think of any others. I'm sure there are others. I just can't think of them offhand.
That's great. And thank you for the little breaking news scoop there, that we can look forward to something at the beginning of July. You heard it here first, folks.
July 1st.
So do you think that, even though it's relatively small right now, that we may see an increasing pace of exits as we move forward?
I don't know the answer to that, Rick. I mean, typically in a down economy, almost all exits happen in an up economy. Almost all. So my gut tells me we're actually going to have less, not more, until we're through COVID. But I look at our model, and we're not slowing down at all, because we have a longer term view. So I think it's going to be dependent on who the other players in the industry might be. I would imagine the strategics will be slowing down on their acquisitions. But regardless, whether it's up or down right now, I think the long arc is definitely for more exits. And depending on your view on COVID, I'm in the camp that says it's probably a rough ride until 2022. So that may be a bit pessimistic. But even in that worldview, 2022 should be, we should be back to business as far as exits go.
So as we're moving into the period where we've got the the U.S. NASA Artemis program going to the moon, and these kinds of activities where you're seeing the kind of, not necessarily collision, but sort of the interaction of large aerospace, new space startups, et cetera. Do you see the potential for any mergers and acquisitions in terms of perhaps a outsourcing of creativity from some of the big aerospace companies moving forward?
I do. Yeah, no, I do. I think this industry, in my opinion, is dramatically undersized. And I'm fascinated by industry dynamics and how industries evolve. And, I tell people, I joke, the only thing that surprises me is that people are surprised at these trends because they repeat in every industry. So there's no doubt in my mind the industry lacks scale. There's no doubt in my mind we'll have more consolidation, both at the bottom and at the top. The main issue is when and how. And I think, Voyager has a role to play. It's not the only role to play, but it has a role to play. And then I think the other thing, which we didn't mention, which I should have, is that it's the intention to take Voyager public. And I think one of the things Virgin has demonstrated is there's huge retail demand for NewSpace. And most people can't write a $50,000 or $100,000 angel check, right? Most retail investors aren't in that position. So I think to the extent we can get more companies public, and I'm not talking about, the Lockheeds of the world, which really aren't a pure play space because they're a defense contractor with a space component, but pure play space companies. I think there's huge demand for that. And then of course, it's almost like, a plumbing system. Capital formation is a plumbing system that recycles. And so with the IPOs and with the exits on the back end, really any exit, but IPO being the most prominent, you're attracting that next round of capital, which attracts the next round of capital because everyone's looking to, return the capital full cycle. So it's really important that we get more exits at the IPO level as well.
Great. Well, you anticipated my next question there, and I know that we're both true believers in trying to maximize the participation of, I guess for lack of a better term, regular folks. In other words, that you wouldn't necessarily have to be a member of the accredited investor class, and that somehow you could actually get in there. Now, as a venture capital firm, we are limited by the SEC rules in those terms, but I could see that moving into the IPOs, the ability to buy and sell. I love the idea of that at some point in the next few years, people are going to have some of the future-oriented space companies in their 401k portfolios, really giving ownership to people in space. So do you believe that we're going to be seeing more and more of this as we move forward?
I do. I think it's inevitable. When you talk to the bankers, and these are bankers at Morgan and Goldman, these are the real prominent, established Wall Street firms. They're convinced this is a multi-trillion-dollar industry. They look at Virgin, they scratch their head, and all respect to George and his team, who I love, and they're some of my favorite people in the world. It is a little bit of a head scratcher that you can have, 400,000 revenue in the last quarter, and the stock goes up, $5 or whatever happens. So I think, there's the stock screen, and I think it's great. But what that tells me is there's just huge unmet demand for NewSpace. It doesn't tell me Virgin's not a great company. That's not the point I'm trying to make at all. But there's really only one pure play NewSpace stock to buy. And that's why I think Virgin's done as well as it has. And I think it'll continue to do well.
Great. And along that line, I do believe that, with Silicon Valley, we saw sort of what some people called an unrealistic overhyping that led to incredible valuations, incredible growth, almost a psychological feeding frenzy that went on in investors. And I think possibly if they're successful, for example, next week with SpaceX, we start to see perhaps the beginning of a drumbeat moving forward, that maybe not as crazy as Silicon Valley was, but I think we're hopeful, and perhaps you are as well, that we'll start to see a little bit of growth in that stock. And it may not seem perhaps as, shall we say, as rational as we might want it to be, but certainly the unleashing of the ability of people to participate in something this exciting, might begin to see some growth. How do you feel about that?
I agree. No, I agree. I think as we get not only the SpaceX launch done next week successfully, but we see Virgin and Blue start flying everyday passengers. And I use everyday in quotes only because these are at least initially going to be, very wealthy people. Hopefully, Space for Humanity and other organizations will help change that. But notwithstanding, these aren't going to be NASA trained astronauts. They're going to be privately trained astronauts. So I think that's going to have a huge impact on the collective psyche to reimagine access to space. So yeah, no, I see it. I mean, I'm getting inbound emails from people I know all over the world saying, hey, I heard about this launch next week. Can you put it in context for me? Why is it such a big deal? So just the fact that people are asking that question, non-space people are asking that question, tells me there's a lot of excitement around this.
Yeah, it's taken quite a while to get here, but it's finally happening. And I mentioned in a piece I'm working on, which I think you've seen, it's like when that green light comes on, when that birthing occurs, and they get ready to open that hatch. It's going to be a very historic moment. We're going to see the birth of human commercial transportation to orbit, and hopefully that'll be followed by a lot of other activities. You then building on top of that with your sort of strengthening of the overall industrial foundations, and coming in at other different angles. I think then we might begin to see, again, a serious rise, not necessarily hype induced, but really serious business plans, really serious investors like yourself getting engaged. So at this point, I think Meagan has been collating a few questions for us, and I want to bring Meagan back in. Meagan, what do you got for a question or two to get us rolling here?
Yeah, we've got several that have come in, and for all of our attendees, just hit that Q&A button on your meeting controls and type in any questions that you have for the team. So we actually had 2 people ask this question, so I'll start with this one. Are you acquiring only in the US, Dylan, or are you looking internationally as well?
Right, internationally. So within our pipeline right now, I believe it's 9 companies that we're in various stages of diligence on. 2 of those are in Europe. Actually, 3 of those are in Europe, and 1 is a multinational, has operations in the US, Asia, and Europe as well. So yeah, no, we're looking globally. I'm a big believer in the power of global business, and I think one of the things that's held NewSpace back is it's been a bit too nationalistic. Part of that is regulatory. Of course, there are some issues that are very valid, but I think in general, we need to do a better job of cross-border collaboration in the industry. So we intend to address that.
Excellent, thank you. And we have a question from NewSpace Finance. And this one's actually kind of near and dear to my heart. So we don't see the usual infrastructure of a functioning capital market, such as data sets, research and analysis, and professional services. This is something that SpaceFund has identified as well, and one of the reasons we do so much in the way of research and publication. But the question to you, Dylan, is what do you think is missing that would help attract new investors to the sector? What data sets are needed?
It's a good question. I mean, I think we've had some people try to address this. I think you guys at SpaceFund, Meagan, are doing a great job. There are other organizations out there that I think are publishing data that's a little bit more self-interested and less third-party, less neutral. And I think that's almost worse than not publishing data at all, honestly, as I think it needs to be very objective. And then we had some large data players in the industry previously, as you may know, Meagan and others, that for whatever reason, those companies are no longer functioning the way they were. So I do see that as a gap. I think, less hype. I mean, I really appreciate what you guys have done with the reality index, but I almost think we need not only the reality index, but we almost need like a third party. I hate to use this analogy because I don't want to politicize the conversation, but it's almost like a fact checker in the industry to just go in and say, okay, defies the laws of physics, off the list. And I realize that's absolutely what the reality rating is, but I almost think we need another layer of analysis. And so I don't know if it's opinion writers writing about it or other things, but I do think what we suffer from a bit is a company gets hyped, it raises a bunch of money, it doesn't work, and then people can point to that and say, well, look, this industry is not for real yet. So as important as the exits are, I think we need to keep our failures to a minimum, assuming they're failures of hype. If they're failures of circumstance, I think that's a different category. So I don't know if that's exactly answering the question, but that's how I see it.
And I'm going to jump in here for a second with you. That we, in our field, many of us are so impassioned and such believers and really want this to happen so badly that there can be at times an almost psychological desperation for heroes and success. And that will sometimes lead us down this path of overlooking, were we more scrupulous, were we more objective, some major flaw in somebody's plan as we begin to hype up with them and get pumped up by them. And it doesn't do us any favors to be like that. So I absolutely agree with you on that. Mm-hmm. Go ahead, Meagan.
This will be a quick one. Dylan, earlier when you were talking about Warren Buffett, and then you mentioned the name of a company that you thought Voyager was most like, there was a little hiccup in your audio. Can you tell us what the name of that company was?
Sure, Danaher, D-A-N-A-H-E-R. And just to be clear, I'm not saying Voyager's like Danaher, because that would be ridiculous, because Danaher is huge, $150 billion publicly traded company. But I admire their model a great deal. I think they've done a really good job.
Perfect, thank you. From Greg Clements, NASA recently announced a set of Artemis Accords to establish some basic rules of engagement for spacefaring nations and property rights for commercial interests. How do you think this will help create a global commercial space economy? And do you think that the companies of those signatory nations will abide by the guidelines?
Sure. Rick, do you want me to take that?
Yeah, I'll come in after. Go ahead.
Sure. So very excited about the Artemis Accords. I had a little bit of some of the backstory on it, knew this was being worked on, and huge supporter of this. I'm a big believer that the other thing the industry needs to do a better job of is creating alignment, especially international alignment, as I mentioned earlier. But even little things like standards, agreeing on standards, agreeing on ways to address the market. That has a huge multiplier effect. It reduces not only cost for everybody to design around a common standard, but it allows people to go quicker because they know where the lighthouse is. They know what to design to. And I joke with people. Imagine every time you went to a different city or a different hotel, you had a different Wi-Fi protocol, and you had to carry a specific modem for a specific city or hotel. And that's kind of where the space industry is right now. We just don't have a lot of things we're aligning around. I see Artemis Accords very similarly. If we have very clear protocols, very clear alignment around purpose and design and things of that nature, not only can we get people to fly in formation easier, but it ultimately creates value. So I'm a big believer in it. Will the countries abide by it? Yeah, I think so. I mean, I'm an optimist. I'm a humanist. I believe people are fundamentally good. So yeah, I would say yes.
Yeah, there's been, for many years, there was this idea that those of us who might have, an entrepreneurial approach to space somehow wanted there to be a Wild West attitude out there, like grab it, take it, I own it kind of thing. And that's really far from the truth. We need basic structures. We need basic means of agreement, as you were saying, standards on the technological side. I mean, down to the level of if somebody over here's spacesuit is ruptured, I want to be able to take mine and plug into it. I mean, very, very basic level like that, or even voltages and, things like that, like you have in your house, but overall, this concept of some shared baseline agreements is critical for us to be able to draw the kind of capital we want in this and to get the kind of participation we want. There are always going to be some competitive geopolitical aspects in terms of people trying to jockey for position and this and that. But largely, even in those areas, we find that your more respected players here on the earth, even then, at least give lip service to sort of legal and policy structures. So it's a very important thing to be able to do that in space.
Mm-hmm. Great.
Great. This is a good one from Kevin Hussein. Which space technologies do you think will be the first ones to be funded with bank debt financing? This is something we've not seen much of in the industry yet. In typical project finance, this is a primary source of financing for a lot of companies. So what sort of projects do you see being able to utilize bank debt finance?
Yeah, well, I can answer that technically. So I'll just touch on the technical parts, but I won't get too deep into it. But you have venture debt, which is basically debt loaned by people who are looking for some kind of equity interest, like a warrant on top of the debt. I assume that's not what they're talking about. I assume they're talking about just traditional bank debt. Traditional bank lenders look at the world in two ways. They look at asset-backed loans and they look at cash flow-backed loans. And so the industries that generate cash are very easy to put bank debt on, or the industries that have heavy assets. You imagine like a car dealership or something like that that has inventory. So space, depending on the technology, I don't know if I'd answer with the technology piece, it's more the way the company is set up, could be eligible for bank financing if they had heavy assets or if they generated a lot of free cash flow. So on the free cash flow side, that would typically be data and analytics type companies that are taking ones and zeros, repackaging and reselling, because that's very capitally efficient and generates a lot of cash. So I would say that's one answer. The other answer would be something that has a lot of assets, like a launch pad or things like that. So I think those are trickier deals to do, because if you inherit a launch pad, a bank does, they don't know what to do with it, right? So it's not easy for them to monetize that necessarily. So the short answer is data and analytics, I think, is the most capitally efficient model we have.
Great, thank you. And here's one I'll direct at Rick. Have you guys thought about tokenization of space assets through crypto? Is that a possibility now or in the future?
Actually, it was a possibility over a year ago when we first did it at SpaceFund. So we do have a path for investors to be able to invest in SpaceFund using security tokens. We were the first ever venture capital company to roll that concept out. We did that at Olga Feldmeyer's Smart Valor conference in Switzerland. So yes, we are absolutely able to do that. However, for those folks who don't necessarily understand that area, for us, this is not some sort of Bitcoin play or anything like that. It is really a way of managing legalities, managing paperwork, and other chains of ownership, things like that. And so as you come into SpaceFund, you have a choice. You can come in traditionally, or you can come in and have security tokens. Everything that the SEC lays out in terms of other venture capital investments applies to these security token investments, but they are available, and we certainly have them. We'd be glad to talk to anybody who wants to come in that way and engage in space.
Great, thank you. Going back to you, Dylan, question from Carrie. Can you talk about what makes an impactful team that you want to bet on, and how you evaluate those teams deciding whether or not to invest? And is that process different for new space companies than it would be for in other sectors?
Yeah, I don't know if it's different for other sectors, because most of the investment that I've done, non-Voyager on the personal side, early stage, I think my precepts are pretty similar across industries. But typically you want a founder or a founding team that is just so clear on the vision. And I heard Mark Andreessen say this once, and I think it's spot on. You want them to have this burning desire to change the world with whatever their problem is they're trying to solve. And they can't for the life of them understand why the rest of the world doesn't see this as the most important problem to solve. So it's that sense of urgency and sense of change that's just unstoppable. And the best founding teams and founders have that element to it. But that's not enough. You need to round out that team, right brain, left brain, all the different skill sets. I would say if you don't have a strong finance person on your team, it's hard to make it go. If you don't have a strong CTO, technical visionary, it's hard to make it go. If you don't have someone who can articulate their thoughts and sell the vision, it's hard to make it go. Now, sometimes that's all the same person. It's unlikely that that's all the same person, but that is possible. But for the most part, those are the different categories you want to see. And then you want to see that those different personalities and categories all are, I call it fly in formation, that they all have to be best friends. Jobs and Wozniak weren't best friends, but they had a common sense of purpose and a common vision and things like that. So I think it's really important that the team dynamic is there, because the easiest way to blow up anything, right, a family, a company, or anything, is to have a lack of alignment. That's the number one failure mode. So I think it's really important.
Great. And we had a couple questions come in about how you find the companies you invest in, from some entrepreneurs wanting to know if they can, do you accept incoming requests or are you out there searching for them, and kind of what's your strategy in locating those companies that are in your pipeline?
Yeah, no, they can always reach out. I love to, as I know you do, Meagan, and you do too, Rick, being a mentor to the industry and helping people think through their business plans and their issues. I enjoy that. I think it's important that all of us help contribute to making the industry better. So I'm always happy to talk to people. We do have a pretty set M&A process on our side. So once something comes inbound for that, it goes to our M&A team, which is pretty substantial. But on a no names basis, if people want to reach out and just talk through their options, I'm happy to do that as well. They can reach me. I'm happy to type my email address, or you can, Meagan, in the chat box. But I would say we're super busy right now. We've had a huge number of inbound requests. As I mentioned, we've got nine companies in the pipeline. So we're pretty full, but at the same time, I wouldn't discourage people from reaching out if they think they have an opportunity. Oh, just one last thing, Meagan, I'll mention. We are considering, and please don't hold me to that, but we are considering at least entertaining the idea of looking at some venture debt. So if venture debt is something that companies are interested in exploring, they can reach out to me on that, and I'm happy to have a conversation with them about it.
Great, and I did just type Dylan's email address into the chat window. If anybody wants to contact him, take a look there. And then last question, because we are getting close to the top of the hour, and we'll let Rick close it out here in a minute. But how can individuals get involved with or invested in Voyager?
Well, we're not taking investment currently, so unfortunately, you'll have to wait till we go public for that to happen. But I would say in terms of getting involved, we have a career site on our website. So if anyone's interested in employment opportunities, they should reach out that way. If they're just looking to partner or plug in some way, they should reach out to me directly via email, and I'm happy to have a chat with people about that.
Great. Thank you so much, Dylan. And really appreciate you being here today and being so open with your answers and just giving us so much of your knowledge. It was a great little download today. So thank you very, very much. And with that, Rick, I'll hand it over to you.
Great. And look, that last question was a setup. We'll take you, and if you're interested in investing in space and you're an accredited investor, give us a call, drop us an email after this meeting, and we would be happy to talk to you. And with any luck, we will then invest your money in companies that later Dylan may acquire. and give us an exit, tying everything together nicely. So first of all, I just real quick to wrap this up, I want to talk about who we are as a company. You know, we've been around a while. In a way, we kind of helped start what's going on right now. We are engaged, and we are inside, and I hate to use that word in financial terms, but we are in the family. And for us, this is something that we don't just do, it's something that we live. Now, we have a really interesting pipeline of companies and projects that we're working on. Meagan and her team in particular are tracking over 2,000 companies. This is curated, this is not a passive list. If you've been to our website, you've seen the SpaceFund reality ratings. Well over 400 companies, and that's going to continue growing as we go sector by sector. In the last few months alone, we've looked at over 125 companies in terms of pulling out the magnifying glass, shall we say. And most recently, we've invested in 3. The 3 companies are very different and represent different parts of the field. Meagan Space, they were the first company to fly additive printing equipment, 3D printer on the space station. They're doing very amazing stuff industrially. Axiom is working on the first private sector space station. And Orbit Fab is focused on resource utilization in terms of being able to refuel existing satellites, moving into larger and larger scale as we move downstream. Now, if you want to come back and hear some more, we're going to be doing this again in June. And we're going to be focused on the moon. We're going to be bringing in some of our friends who, some of whom recently got some of the small business contracts on the moon, the lunar lander systems, maybe some others. And we would love to have you come on back and join in on that conversation. So if we can have the, there we are. Feel free to reach out to us too, and we would love to have you follow us. SpaceFund Inc. on Twitter. I am Rocket Rick, and then there's Meagan M. Crawford. Look, I just want to say something to you. As you can see with Dylan Taylor, and if you know any of the people in our field who are in the more credible side of things, you can see that there are a great group of human beings working on these projects here in the US and around the world. And they're doing it because they believe in you. They believe in the world without borders. They believe in opening the frontier. And as we like to say in the company, nobody stays until somebody pays. And frankly, I'd rather that be people who are customers and people who are finding profit in space than taxpayers and the government. So we're very real, we're very serious, and we're very excited that we're able to join us. So thank you very much. See you next time.
Thank you, everyone. Have a great weekend.